folks, I'm L.A. Little and this is your weekly TA Wrap. We take a look at these markets and we do it from a neoclassical perspective, trying to measure supply and demand on the charts with respect to trend. I do this show every week, every Sunday night, live at 9 o'clock Eastern Time, here from the base of the beautiful Rocky Mountains. Folks, it was another week of turmoil, if you will. These markets look like they want to break down. They try to break down. But you know, I used to work with a colleague, Helene Meisler, and she used to say about certain stocks, you know, when they were on their deathbed, so to speak, and you know, plummeting lower, that they would rally 4 or 5 times 20-30% on the way to zero. And if you think about what that means, is that even a stock, and of course the market's different, but even a stock that is going down is going to have some of the most violent rallies all the way to zero. Markets always rally. They always tend to put up a fight. There's so much in terms of politicians, in terms of the Fed, in terms of central bankers. You know, so much of the system is built on markets going higher, not lower, and you know, it's you know, I mean, if you look at the stats, markets are up almost 80% of the time. They tend to go up, not down. It's just that when they go down violently on occasion. Last week, you know, when I left you on Thursday, we were talking about the markets bouncing, and that is what they finally did. Took them all day Friday to bounce, but they did bounce towards the end. Dow was up 44. You can see the numbers here. S&P back up to 1877, tax on 7. The story is not those daily numbers, though. The story is, you know, a divergent market that continues to diverge in a very large way. And if you look at the S&P 500, you can see it's hanging up here at the highs. That's on a daily chart, and I only do this to show you the divergence. Here's your Russells. You know, those two charts, if you don't believe that's divergent, well, I'm not sure what is, because look at the Russell, overlay that with the S&P 500. There's really no comparison. Something larger is taking place. And so if we start to look at the weeklies and try to make sense of the weeklies, you know, here's the S&Ps. So when you get in this kind of situation, you start trying to pick out particulars that give you some idea of what might happen. And so if I look at the S&P 500, I see a high here on March 31st week, 1897.28. That got over that previous high back here at 1883. Couldn't hold it, right? We go back up. We actually set a new high here, closing high. Then we're inside bar. Now we go over it, close back underneath it, also closing back underneath it March 31st bar, and in both cases having less volume as we do it. So if you're doing a strict, just technical, neoclassical TA of the way this thing's behaving, you test and fail both on price and on volume on the weekly. Now, I don't want to get too carried away with that test, because we've seen those tests take place multiple times already. And we also have, because of the divergence, we also have still ABCD structures, bullish ones, you know, that reach up to the 1950 area. So there still could be the case made that this is going to try to work higher. Of course, looking at this index, it looks that way because it's hanging at the highs, but it did fail on the weekly. On the daily, it actually held and is now trying to retest, regenerate on the daily. And what I'm talking about is that wide price spread bar. Remember, we were looking at it. We tested into the bottom of it on Thursday. We didn't have quite the volume, a little bit less. And what do? We bounce. And that's what we thought it would do. So from that perspective, on a daily basis, it did what it was supposed to do. That's the S&P 500. That's the way it's set up. Now, if we go back over to the Russell, and we look at the Russell again from a weekly perspective, the Russell actually, well, I'm going to start with the daily. The Russell actually has finished off an ABCD structure that it had, that it was working on the daily. Back from here, that ABCD structure finally got finished on this bar. So we actually got a completion of an ABCD structure, and even though we got one break of a swing point low, and it appears we got slightly above it, but it appears to be trying to regenerate lower. Now we have the bounce taking place. We hit the bottom. We didn't have as much volume on that test of this swing point low, and we flip around, hammer, and now another day higher. Now on the weekly, on the Russell, we actually tested a swing point low from here and held, had more volume on that test, but did hold. But we also tested, and I didn't realize this until I did the weekly broadcast for the members this morning, that this test actually tested this low. And you can see the volume there versus the volume here, about 3/4 as much volume. Test goes underneath it, back over it, closes over it, still doesn't break. Russell holds on a weekly, and that says you can do what? That says you can bounce, and that's exactly what it's doing right now. It is bouncing. Now, just like I said on the S&P 500, the Russell has its own structure, and it's a bearish one. And that's a bearish ABCD structure that's going to take it down to the 1020, 1030 area. That's still a good piece down. That would actually break multiple swing points lows if it goes, right? 3 of them, matter of fact. So that would be one heck of a move. If it took place, it would reset on the intermediate term time frames, right? That's the divergent nature of this market, and those two indexes actually show it the best. Now, one other thing to think about before we leave the indexes is the GSPC. If we go back to the S&P 500, this low on April 7th, 1814.36, now has 5 bars beyond it. And the way the neoclassical thought works, to make a swing point low, for this to actually actualize, right? Right now it's just potential. For it to actualize, you actually need 6 bars. You have 5. If we don't undercut this week, that will be bar 6. This will become a swing point low, right? And then any trade underneath that would actually reset on the intermediate term time frame. The reason that's important is because these markets hugely need a reset on the intermediate term time frame in order to go higher. And what I mean by that is if we pull over the S&P 500, or actually I've got the Russell up right now, the Russell is at 76, almost 77% on the weekly, 75% bearish on the daily. So it's starting to get stretched here. It's very stretched there. So the Russell is actually going to, is got divergence within it, in that it's gone a long time without being able to break down that intermediate term time frame. When you see this kind of a situation, right, and you see this kind of a formation, what this says is that if this can break, reset, go to sideways, then what we're going to see more than likely is a quick plunge, right, to do the reset, and then it pushed right back the other way. That's going to break some sort of a swing point high and reset this. So any kind of a push down is probably going to see a push right back the other way. And if we go back now to the S&Ps, if it were to also reset on that weekly, which it desperately needs to do, 93% at this point, that would allow a reset, a push back higher, and let these markets try to climb some more. So when you look at it from that perspective, it still looks as if somehow, some way, this market's going to try to reset on these weekly time frames somewhere fairly soon, and the structure is slowly being put into place to allow that to happen on the S&P 500 as well as the Russell. And if we look at the Nasdaq, it's the same situation. The Nasdaq 95.9 on the MTTF, ABCD structure on the way down, has tested that low, tested with as much volume, has tried to break higher, been unable to, looks as if it's also going to try to make a crawl back down. If the Russell breaks, this will go with it. If that happens, S&P is going to be pulled down, and if it takes another week for that to take place, S&P is going to have a low printed up around the 1846, 1850 area, a place that it could break the intermediate term time frame and reset. If I look at the sectors themselves are not exactly bullish, and that was on the daily time frame. So since this is a weekly show, let's pop through these together and see what they look like on the weekly time frame. So let's start with the transports. One of the good things about doing a show is I get to cover things here that I don't get to cover elsewhere given time constraints. So on the weekly, so we're pressing higher, we have no volume. This is the strongest sector right now, that's the transports. So looks like it can go higher even though it has nothing. Now if we look at the SMHs, this looks like a continuation of some sort of a sideways trend, and that's based on the fact that we've got some large volume bars off those highs. This could actually come back and test back into this wide price spread bar, so a little bit farther down. That's the SMHs. Now that's actually a little bit heavily weighted to 2 or 3 stocks. If we look at this SOX, which is a little bit more broad for the chips, let's see what that one looks like. Wow, that's pathetic. Okay, so now this is more representative of what it really looks like, and that is that look at what happened here. You tested the high, higher volume, right? You got up there, you couldn't hold, and then you got a big bar off. That was the expansion of volume, wide price spread. Now you push back up, you test again here, and now you're testing again, and look at the volumes now. There's absolutely none. This looks like it's going to try to push back down as a result. You got this wide price spread bar, and you know, if there's ever a spot that looks like it wants to come back to, it's down here. And so that actually would set up, you know, and actually if you look at it, that would be an ABCD structure on the way down to get it right into that area. So that kind of looks like where that wants to go. That's the SOX. XLB has been reasonably strong. XLB pushing up, test the high, has no volume. That's a failure on price and volume at the highs. That looks to come back on a weekly basis. All of these are on the weekly. XLE had been one of the strongest. It's been testing up there, still holding. You got this big wide price spread, heavy volume bar. Top of that's 93.07. We tested into it, not enough volume. If it gets into this bar, folks, it's coming all the way back, right to the bottom of it. And so, you know, it's kind of a key area. 93 is the key area. It's it looks like it's out of juice on the way up, but so far it hasn't broken. XLF, so that's still slightly positive. XLF, so this one is a real mess. and that is that it can't lift. So you got a breakdown bar here on a weekly. You've tested it twice. You failed twice. You're regenerating lower. This wants to come back down and test the lows. And you got volume down there, so that will be the test into this area. If it gets under this low, the next one's there. And there's really nothing until you get there. So yeah, you actually have one more. You actually have a little support right here. So it would have to get underneath this bar, and that price point, that date is December 16th, and you got 3 million on that one. Yeah, so that's anywhere from that low is 21 to 21.19 is the key. That's going to be the tough area to break under. But it does look like it's going to go down there and test it. Financials, biggest sector in the S&Ps. XLI, up until now, has been looking great. It just failed on price and volume at the highs, and on the weekly it looks worse. Came off with volume. That one looks to be done for now. So if you're catching the drift here, the sectors aren't supporting a break to the top side. Now the one that's been doing well is the XLK. This one came up. What does it do? It tests the top. 36.93 was the high. Test it. 36.94. Doing 22 million on the way up to test, and what was there? 42 up there. So we do half the volume on the test and we fail. That looks lower to me. XLP, the safety net. These guys, on a weekly still look fine. They have pretty much finished off. It looks like an ABCD structure. I'm not sure if they actually set one up. 43, and that low was 42.39. Yeah, it did. And boy, that's about as close as you can get to set one up. So you have an ABCD structure from here to there, back down, and then back up again. So it can still go farther, and still looks like it will. Daily doesn't look as good, but I don't think this one's quite done yet. So XLP's positive, IYT still positive, although there's no volume on the IYT. Here's your utilities. Utilities coming off. Volume shrinking. Utilities are really going to be a range trade now. And I've been saying this for a while. Since we're looking at the weekly, that range should be in this area to start with. And I would think that's where they trade to begin with. A retest of this area is going to happen on 1, 2, 3, 4, 5, probably 6 bars, so it's probably going to be a buy as it comes into that area. That's the utilities. If we look at the healthcare sector, on healthcare came off hard. Remember the biotechs. It left volume at the bottom. That suggests it will be back down there. It's also tested this big wide price spread, heavy volume bar. It's done it twice for 3 times already, right? Each time failing. All of them on light volume. This is going to come back down again as well. ABCD structure, take it lower, break swing points, come down to the next set. So XLV also looks to come lower, and the last one is the XLY. And again, we're looking at the weeklies, and the XLY looks even worse. That's an ABCD structure to the downside as well. From here up and back down, which would take you into the swing point low and probably break it and take it right to it. And there's a lot of volume on that guy, so that wants to be tested. So XLY looks to go lower, and again, we're talking weekly basis. If I look at the weeklies in the sectors, there's only 2 of them still look strong. One of them in a range trade with the XLU. The rest of them failures wanting to pull back. Then we go over and look at the bonds. Now the bonds, well, actually let's stay on the equities for a second, a little bit longer. Let's look at the European stocks, where we know that the expectation is that they're going to push more money into the system. So last week, the week before last, this is the CACs on a weekly, 4507.24. We get over it. We're doing 6.3 versus 6.2. That tells me this can hang, and it probably will hang at the highs. The FTSE made a huge run all the way back to the tops. Gets over this swing point, from March 3rd. It's testing into the January 20th, and there's also a swing point out there from May 20th last year. You got 42 over there, 31 here, and we just got over a 36, and we're doing 36, 36 roughly. So that looks to try to make it all the way to the top. And that's where it's going to have difficulty, because that area up there has a lot more volume on it. But again, a nice big strong move to the top side on a weekly. This certainly looks like it's going to try to go higher. If I look at the DAX, the German market actually pushed with volume at the highs. The tops up there, you had 5.2 and 4.6. You hit it with 5. So not quite enough, but certainly with enough juice to make it go back and try again. And I suspect that's probably what it will do. So all the European markets look to probably hang on and try to work higher. If we go over to Hong Kong, actually let's go to the Hang Seng first, which is the Chinese H shares. And this is trying to put in an ABCD structure up. And so if I look here, I've got a nice little ABCD structure starting to play out. It would take it back into this big bar. That's going to be the big resistance zone on the way back. There's really another one here. That was where this failure took place. As a matter of fact, that was a good reason for the failure. I didn't notice that. So as we went into that area, we did it with 13.3, going into it with going into 14.6. That gave us a big pullback. It's going to try to get up there and do it again, because it did hit it with enough volume. So it can try one more time. And you can see we left volume at the top, so I suspect it probably will. And let me look at Hong Kong right quick, because that's the other major. On Hong Kong, we got this one actually wants to go up there and test again and set an ABCD that would take it to the top. So, and there's a lot of talk, just like in Europe, there's a lot of talk in China of easing, right? And that ABCD would take it right to the top, and that looks to be what it wants to do. So when you look at the world markets, unlike our markets, they seem to be suggesting higher, and even though we're divergent here. Going over to the bonds real quick, bonds still pressing on a weekly basis. They're pressing into that big bar that we talked about some time back, 114.08. We got up to 114. We're not doing the volume. That looks to fell in that area. Pullback on bonds should be positive for stocks. All right, I think that's the majors. That's the major discussion, the major concepts that are out there for now. If I just try to wrap it all up and say, what's happening this week? These markets, these being the domestic markets, still want to pull back. As much as they want to go up, they also want to pull back. They want to reset to set up better structures to get to the top side. And, I don't know if it happens this week or next. If it happens next week, into this week and into next week, that would allow the resets on all the major indexes, which would be a very big positive, actually, on a longer term basis, because it could set the framework for something larger. Folks, you have to reset every now and then. You can't always go up. And that's what these markets have been trying to do, and they just can't do it. Here's the Dow, and the Dow also did the retest regen and popped up. So we'll see. If you think about it, Mondays anymore have become Merger Monday. So we should see some sort of Merger Monday madness. I saw right before I came on, AT&T wrapped up that deal with DirecTV. They're going to propose a takeover of DirecTV at about $95 a share. And I didn't look to see what DTV's trading at. I think it's DTV. At $95 a share, well, it ain't much of a premium. They're already up there. It's not like they didn't see this coming, right? This has been in the talks for a while. So 95 is another $5. You know, it is what it is. Merger Monday. We don't have, if you look at the Fed schedule anymore, you don't have huge Fed influx like we used to. I mean, we used to have Federal Reserve buying mortgage-backed securities, MBSs, and bonds, long-term bonds and short-term, on the order of, several billion every day. Now you have 2 or 3 days a week they don't buy anything, and they only have 1 or 2 days where they buy big. So you can see that landscape is changing, and I'm sure that has some effect on these markets. If European market, if we do see QE over there, not just a rate cut, we're going to get that same sort of reaction starting to take place again, just as we saw off of Japan when Japan did its big cut. So, it's not as if the central bankers are to be forgotten, at least not yet. And that's 5 years after what they call the Great Recession. It's amazing. This is going to go on for another 3 or 4 years at least. And, God forbid they have another recession somewhere in between, because I don't know what they're going to pull out of their tool chest in. Folks, let me see here. PFE, a new offer. Yeah, PFE is also, they were halted last week on an offer, and it looks like that will also come out, and Tommy's telling me it is. So, yeah, it's, Merger Monday. That's what happens every Monday now. And then Tuesday is usually the big day for the Fed. They keep stacking the deck on Tuesdays. Although last week, Tuesday didn't matter. You got the push on Monday, and Tuesday folded. I don't think the Fed is quite what it was anymore, given that it's not constant every day, the money coming in. All right, folks, thanks for joining me. Have a great one. I'll see you tomorrow. We'll see how Merger Monday plays out, and let's look at this week. If I have to watch an index, and I didn't even talk about it, maybe I should wrap up with that one, I'd be watching the NDX. The NDX is kind of the one in the balance here. It's been trying to get over this big bar from April 7th, which is the same bar, has the volume for everybody. Doesn't have the volume as it's pushing up on the weekly. You can see here on the daily, though, as it keeps trying. And if this can get over, right, that could push the S&Ps back to the top, pull the Russell back up as high, higher as well. So to me, if I had something to put on the scales and watch, it would be the NDX. I'm going to leave it at that. Thanks a lot. Have a great one. Take care. Until next time. I'm LA. This is, and it was, your weekly TA Wrap. Have a great night. Until next time. Take care.